Can you believe it? Number 58 already? Hello everybody, how's it going? It's 12:30 and you know what that means, right? It means that it's time to discuss it with Drake, and that would be me. You and I have an appointment every week at this time to discuss topics that might be of interest to you, should be of interest to you. Some of you maybe never even heard of some of these topics, but I'm here for you. So someone just recently asked me about, well, can you explain equity? It caught me by surprise because sometimes when you're in the industry or whatever industry that you're in, you talk in your language, and sometimes you just make the assumption that everybody knows what we're talking about. But you know what? Sometimes they don't. So before we get started, that's actually going to be our topic today. What does it mean to build equity? It's going to be a quick one. But before we get started, once again, if you wouldn't mind, please just heading on over to YouTube, type in Drake's Real Estate TV, hit subscribe, because I've got some good things coming. Sorry, my nose is itchy a little bit. Maybe some leftover pollen from the mountains. Anyways, let's get started. So, if you own a home, one of the benefits compared to renting is that each month that you're making your on-time mortgage payments, you're also actually building an asset which we would call equity. So equity refers to the amount of your home that you truly own after you take into account the debt you owe, which is, of course, your mortgage loan. So if you don't own a home, call me. Let's fix that, okay? It's a great way to build a retirement. To calculate your current equity, you should basically subtract your loan balance from your home's market value. So if you live here in Southern California and would like to know what your home's value is, just shoot me a request. Call me, text me, shoot me an email. I'm easy to find, right? On the other hand, if the number is negative, then your home is actually worth less than what you owe on it. That would be making you upside down in equity. That's not a good thing. That's when you've heard of the term short sale, okay? But that's a whole nother topic. We don't want to go there again, right? So we're not in that kind of market right now by any means, thank goodness. So this is obviously not the goal. The goal is to grow your equity over time as you pay your loan off. So until you pay off your mortgage, even though you're considered a homeowner, your lender still has an interest in your property. Does that make sense? Of course it does. If you're buying a home and you're putting 10% down, who owns 90%? The bank. Exactly. So how does equity work? Well, if you bought a home for $500,000 and you put down $100,000, which is about 20% down payment, then you would have home equity interest of approximately 20%. Correct? I think you get that. And you own the $100,000 of your home right off the bat because that was your down payment. However, if your home value goes up over time, and most do, while your loan balance begins to go down, your equity should actually go up. Okay, so if you bought your home and the market spiked, and your home is now worth $600,000, hi Nadia, I love you. You'd still owe, about maybe let's say $350 now, meaning that your equity has gone from 20% to really actually closer to almost 40% just by time. Okay, and that's called appreciation. So how can you build equity? Well, the primary way that you increase your equity is by paying off your loan. So if you have a standard amortizing loan, that means that you're making equal monthly payments. Okay, so those payments in this scenario, go toward the interest and principal. And over time, that amount is going to go toward, the amount that goes toward your principal actually goes up. So in the beginning, you're paying a lot of interest. Each year that you own your home and pay your mortgage means that you're actually, of course, gradually paying it off. You've heard of 30-year mortgage loans. Excuse me. There's also 15. So you can actually grow your equity by working to increase the value of your home as well. So home prices do tend to rise in a healthy economy on their own as long as the real estate market is doing well. And today, it's doing well. You can speed that up, of course, based on work of improvements that you do in your home. So are you updating your kitchen, your bathrooms? Are you adding a second bathroom? Are you adding decks or square footage? These all increase your home's worth, therefore increasing your equity. You can also make accelerated payments on your mortgage. And most of the time as a homeowner, you're making 12 payments a year, right? Well, if you actually decide to pay every other week, every 2 weeks, you actually end up making more payments a year. And that actually ends up being the same as paying 13 months in 12 months, believe it or not. So you're taking some interest off the total life of your loan. Might not seem anything big right now, but trust me, it all adds up. So you'll be able to pay your mortgage faster and build equity more quickly as well. Well, can you use home equity? Well, of course you can. The equity you have in your home is an important asset, and it's calculated as part of your net worth, actually. So you can actually use your equity in different ways. If you sell your home, then you're taking the equity that you have in your home for sale, and many people actually use that equity and use it as their down payment for their bigger home. That's how they gradually go up, and that's why I always tell people, get your foot in the door. Just get your foot in the door, get in the game. I know you don't want to live in the condo, but you know what? If you live in the condo for 2 years, you're going to build equity. It's a good thing. So you can also get a loan against your equity. This is known as a home equity line of credit or a second mortgage in some cases. So some people actually invest this money into more real estate. So overall, having a mortgage is sometimes viewed, or I tell people, it's just really view it if you can as a forced savings account. Okay, this is how I try to educate all my clients. So each month that you're making a payment or not paying rent instead, you're perhaps you can make multiple payments. You're building equity. You're building the value of your asset. It's like adding money to a savings account, but instead of your asset being cash, it's your home's equity. Okay, that's really all I have for today. I hope you found it interesting. It's really actually that simple. So anyways, just want to give a shout out to Realty Times for providing that information for me today so I can pass it on to you. Remember, don't keep me secret. Tell everyone you know about me. And again, if there's a topic that you'd like to talk about or be educated on, please just let me know and I'll add it to the calendar, just like this one here. So hope you have a fantastic week. Be kind to one another. Don't forget to live, laugh, and love. And until next week when we see each other again, put your real estate needs in cruise control. Contact Drake for Homes. We'll talk to you later. Okay? Thanks, everyone. Bye now.